Our next guest is my good friend and industry, I think just a kind of a prophet, is the one and only Dale Pollak, founder of vAuto. So I really think we're going to get an interesting perspective and maybe a juxtaposition in some sorts on what we just heard, which I think is the value of these conversations. So I'd like to welcome Dale to the program if he can hear me. Dale, can you hear me?
I can, and thanks for having me join your event today, Paul.
Oh, man, thank you so much, Dale. As usual, thanks for being open-handed with your time and being willing to speak to the industry about, kind of what you're seeing and your perspective.
Great. So unfortunately, I have not been able to listen to the previous speakers, so you're going to get the unreviewed, unedited version of my vision and perspective of the present and the limited perspective that I think that I have on the future.
Well, that's the only Dale Pollak I like, is the one that's unfiltered and unrehearsed. So go ahead, Dale, give it to us. What are you seeing in the industry today? What's your insight?
Well, it's pretty interesting for me because over the course of the past several weeks, I've organized with a group of people that I only previously occasionally talked to. I'm now in daily communication with some really insightful people inside Mannheim, people that you wouldn't ordinarily ever hear about or even meet or know of. But these are the really bright analysts and data people inside Mannheim. And of course, I maintain my own inner circle of such people at vAuto. So between Mannheim and vAuto, I feel like I have a front row seat to what's happening in the wholesale and retail market. And I'm getting, we've identified and now are tracking on a daily basis about a dozen what we would consider to be leading indicators. And every day we're watching these numbers, and then once a week, this group that I'm referring to comes together, and we see what sort of sense we can make of the data and determine if there's any consensus that we can arrive at. So it's been a really interesting process over the previous 3-4 weeks. And with all of that data and all of those really great minds coming together, what I can tell you is that I don't think we can predict with any degree of accuracy what's going to happen in the retail or wholesale markets beyond maybe a couple of weeks. There's just too many uncertainties out there, and I'm going to talk about some of those uncertainties, and I'm going to also share with you whatever certainty or consensus of certainty we think we can derive in that short period of a couple of weeks out from now. So the good news is that retail sales are picking up. Now, this is very geographic dependent. I mean, there are some markets much more so than other markets, and I think we all understand, how states are behaving. But generally speaking, fairly uniformly, with some exceptions, sales are coming back pretty strong, and I think that it is creating a fair amount of optimism among people. But for me, perhaps I'm approaching it or looking at it with a bit more caution than some. So, why are sales coming back? Well, I think it's attributable to a number of different factors. One is that some states are opening up that were previously closed. Another reason is some states are expanding the definition of what they consider essential services and how dealerships can operate. I think it's also attributable to some new car incentives. But there's one thing that I believe trumps them all in terms of what's stimulating sales, and that is that over the course of the last couple of weeks, approximately 120 million people received a check anywhere from $1,200 to $2,400, and that is down payment type money. And people are out spending that money, and a lot of people are out spending that money on cars. I had a recent conversation, kind of makes me laugh, with an economist who said, yeah, Dale, there may be some of that, but our survey says that only 7% of people say they're going to spend that money on a car. Well, 7% of 120 million people is a boatload of people. It's about 8.5 million people. And I actually believe that there are more than 7% of people who are doing it, because I'm talking to dealers every day, and I'm questioning them pretty closely about where this traffic's coming from. And there's no question about it that the stimulus money is working exactly the way the government intended it to be working, and a large percentage of it is going to car sales, which is great. But here's the problem. It may very well be a one-and-done type of situation.
Right.
So this the spurt that we're seeing in sales, could likely not last. And so here are just some metrics to give you an idea of what's happening, what's likely to happen in the next couple of weeks. Yeah. So dealer day supply on dealers' lots has been falling almost by the day. It was as high as 86-day supply a few weeks ago, and as of this morning, it's a 61-day supply. And that drop in day supply is attributable to basically dealers not buying many cars, maybe trading for some, but not buying cars, but selling cars. So their day supply is coming down. Now, a year ago this time, dealer day supply was 44. So if you sort of think about maybe 44 being the natural level, and it's currently coming down, and right now it's at 61. You don't have to think hard to understand that soon dealers are going to start feeling like they're short on inventory, and they're going to start going to the auctions again, where they've not been lately. And now at the auctions, we're beginning to see early signs of that. So the day supply at auctions a year ago, this time was about mid-20, maybe 20, 22, 25 day supply. Well, as of a couple of weeks ago, I saw that number as high as 114 day supply. And as of today, and as of today, I think that day supply is now has come down to 86. We're also watching check-ins, the number of vehicles that are arriving at auctions, so that's fairly flat. So we've got basically day supply of auction cars coming down, and that makes sense because we're starting to see early signs of some dealers going to auctions. And to further support that trend, the average price of a vehicle that is transacting at auction, as of a couple of weeks ago, was in the $11,000 range, and now it's up in the $13,000 range. And a year ago, it was in the high $14,000. So you kind of can see what's happening here. We're getting more buyers at the auctions, buying more of the, I don't want to say higher price stuff, but relatively speaking, higher stuff. It still is the fact that roughly 70% of the acquisitions of the top 80% of the vehicles that are being purchased by independent dealers. I would expect to see more franchise dealers filtering in soon, but we can see the dynamic. Retail sales picking up, dealer inventories coming down, dealers sensing that they're going to need some cars or beginning to need some cars, so they're going to auction. So what I believe is going to happen is that May is going to evidence a pickup in wholesale activity driven by today's pickup in retail activity. And I think that by June 1st, would be my estimate, we're going to, for the first time, see some significant wholesale buying. May will be the early trend, early leading edge of it. And I think perhaps by June 1st, about, maybe a little less than 6 weeks from now, we're going to see auction activity really picking up. Now, having said that, one of the issues that looms out there is that right now, and I'm speaking for Manheim, there's about 480,000 cars sitting there. Roughly 400 of the 480 are late model lease returns and fleet commercial rent-a-car turn-ins. So there's a disproportionate amount of high dollar stuff at auction, and I think that the commercial sellers have been fairly reluctant to drop their starting prices. But I would anticipate that as they begin to see more dealer activity in the lanes, whether it be virtual or physical, I believe that the commercial sellers are going to begin to probably drop their opening or floor prices or reserve prices, and I think we're going to start to see some of that stuff start to transact. So in the short term, and I'm now speaking perhaps 4 to 6 weeks, I see, relatively speaking, stronger demand and high supply, but coming down in the wholesale market. I think prices in the wholesale market are actually going to firm up and maybe even for the next 4 to 6 weeks rise a bit. And my concern is that while all of that is really good, my concern is that if this bump that we're getting in retail activity is largely stimulus driven and temporary, I'm afraid that dealers, if they're not careful, could start stocking their lots with a certain amount of unwarranted optimism. Because here's what I think on the downside on the longer term. I just cannot get past the fact that we have currently 26 million claims for unemployment, and I think we're expecting maybe 3 to 4 million more this week. So it could be that by the end of this week we have maybe 30 million household claims for unemployment. Well, there's got to be a lot of stress, financial stress in homes across America associated with that. I have to believe that homes are missing, bills that are coming due this month. They're missing those payments. And it's going to be a long time before those jobs are restored. It's just simply going to take a long time. And then the other thing that I'm thinking about is that unemployment subsidies from the government, unemployment runs for 16 weeks. So if you do the math on that,
yep.
I think by late summer, early fall, when unemployment runs out, and you still have a lot of people who are unemployed, and perhaps the stimulus money has been spent, unless there's more stimulus, which there could be. I got to believe that we're going to fall back into some depressed sales levels, or very well could. I don't know how we can not, with that many unemployed households, and unemployment runs out. Now, of course, the government can change that. They can extend unemployment benefits. They can do more stimulus, and that might happen. But it's definitely a possibility that it won't happen. So, any notion that a recovery could be like a V, which it could look like right now with the stimulus activity that's out there, I don't think is warranted. I'm not even sure that a U-shaped recovery is likely. I think it could be a W.
Right.
So I think we're likely going to get a bump right now, but if we don't get a lot of continued government stimulus, I think it could fall off again. So I think this is a danger for both dealers and internally for us vendors. If we want to look at what's happening right now, which looks like a sign of recovery, and think that that's going to be sustainable and long term, I would caution. I would like to believe it is. I'd like to be wrong, but I think the circumstances are such that it might not be
I think
a sustainable recovery.
I think that's like a really rational approach. Even thinking of a W. We only have a few minutes. I think that was an awesome download, because you kind of painted this picture that like dealer inventories are selling down, but kind of the glut is piling up at the auctions. And then like with the stimulus and kind of you see prices eventually, auction traffic starting to start moving again, and prices maybe firming up a bit. But the real unknown is what's going to happen with the unemployment. Like, I think a lot of people discount the unemployment numbers that you're seeing come through, because everybody knows, or at least a lot of people know, that the unemployment amounts of money that are being paid out are equivalent and sometimes greater than what the person was making as a regular income. And the real question is, how many of those people are actually going to go back to work as this washes out? And what will the stimulus be? So if I could sum it up, because we're just about out of time, if I could sum it up, you're telling dealers like, hey, pay attention a lot to the next 3 or 4 months, because there's going to be some opportunity there, but don't get overconfident that it's going to come all the way back, because this could be a W, and you could be setting yourself up to be sitting on a bunch of unwanted inventory or overpriced inventory at that time. Am I hearing you right?
Yeah, that's exactly my message. And Paul, and if I could just add one additional
Please.
thought. You know, I'm troubled by the discussion of cash for clunkers. I don't think that a cash for clunkers program is warranted for a number of reasons. Number one, unlike in 08-09 where we had a lot of unsold new car inventory, I think we may very well be looking at a shortage of new car inventory. Secondly, I am not in favor of destroying billions of dollars of older vehicles that are reliable that I think our economy is going to need. I actually don't even believe that the policy underlying selling more new cars is the best thing for the economy. The biggest problem in the industry today is the oversupply of these late model used vehicles. And I'm going to tell you something. If retail demand isn't strong for those and the value of those cars drop more than they've already dropped, we're going to have problems in a number of places. Number one, the corporations that have those cars on their balance sheets for too much money today and even less in the future are going to take a hard hit. Number two, future residual values are going to take a hard hit for like models, so we're going to have more trouble selling new cars in the future through leasing if the residuals fall. And then the real problem for car dealers is with extended term financing that we've seen over the past several years. There's already a lot of negative equity in people who want to trade their 1, 2, 3-year-old car. If the value of these 1, 2, 3-year-old cars at the auctions really take a hit, whatever negative equity is out there right now that's making it difficult for us to trade, it's going to get a lot worse. So everybody, consumers, dealers, corporations, are really going to take it on the chin if we don't create some strong retail demand for these late model used cars. And just imagine what would happen if you could advertise that you have something like 0% financing for 84 months on certified used vehicles. Consumers would be breaking your doors down for them. Dealers would be rushing to the auction to buy the glut of these cars, bidding up the values, and everybody in the ecosystem would be benefited from that. So I strongly believe that cash for clunkers is just not addressing the problem at hand, and in fact could actually do more harm than good.
Well, that sounds like the next Dale Pollak blog article to me. I think fleshing those thoughts out there would be beneficial for us to all hear more of that. Dale, I'm sorry, we're out of time, but I think it was an incredible contribution to this conversation where it's already been, and then we're going to talk about used vehicle pricing and things more. We have George Shimon, the CEO of ACV, coming on in a little bit. So, Dale, as usual, thank you for sharing with the industry what your insights are. Appreciate it.
Paul, it's always a privilege to work with you, and I appreciate all the good, hard work you're doing for the industry these days and in the past, and I'm sure in the future. So, thank you.
Thanks. We'll talk soon, Dale.
So long.